Hi, this is Adam Clark. I'm the CEO of Advanced Flooring Concepts, and we're going to show you the 2024 shipping trends and how LVT has been affected. This has been broken down into four different modules, as you can see. We're going to look at video from Freightos. It talks about shipping, the Red Sea facts from a macro level and shipping routes. We're going to be looking at shipping rates and delivery times, and the prices of LVT shipping from December of 23 to 2024.
Let's take a look at international freight in 2023. So in the United States, December brought good news for retailers. There was pretty strong holiday season sales. And on the economic front, inflation in the United States is getting closer to the 2.6% target. The bottom line is that we may have avoided a recession, and that's a good thing. In the first quarter of the year, interest rates are expected to be eased, and looking ahead, it seems like the US economy is in good shape for 2024. But let's talk freight, because that's why you're here. Most companies are seeing inventory levels go back to normal. That is good news. Small and mid-sized businesses that are on Freightos.com are cautiously optimistic. About 46% expect stable consumer demand in 24, and 41% even anticipate growth. So US import volumes have surged, and that is a reflection of the strong retail sales in 2023, with volumes higher in November and December than they were in 2019. But the ocean freight market faces challenges. First, there's more ships. That means there's more supply than demand. Freight rates have also fluctuated, especially due to the peak season rate increases on Trans-Pacific and European routes as carriers raise prices to deal with that overcapacity that I mentioned. Let's talk air. In air freight, volumes are recovering, but they're still below the 2019 levels, and there are more planes since there's been a rise in passenger travel during the recovery from COVID. Rates, especially from China, have surged, and overcapacity will continue with us during 24. In the Panama Canal, restrictions on the number of ships that can pass is affecting Asia-US East Coast shipments, with some carriers forced to reroute their ships. And finally, in the Red Sea, attacks by Houthi rebels, as everybody knows, has led to major carriers diverting shipments. We're talking ocean liners that represent over 60% of the industry's capacity. It means longer transit time, possible port congestion, empty containers getting delayed, and ultimately potentially higher prices and surcharges. The international coalition has made efforts to deter those attacks, but the situation is tense and uncertain, which is basically international freight always. Overall, the Red Sea crisis has significantly impacted shipping routes, but has not yet caused a major disruption or rate increases, certainly not close to what we experienced in 2020 and 2021. The industry is working to adapt to these challenges, as the industry always has. If you look at the past couple of years, we've been through the Hanjin bankruptcy, trade tariff wars with China, pandemic, ships getting stuck in the Suez Canal, the Houthis, and the Red Sea. We've always bounced back, and the survey that we just ran across international importers in the United States showed exactly that. So here's to better 2024. Thanks so much for watching. Be sure to follow Freightos in order to get more input and more data on how you can make your supply chains tick better.
What are the current shipping routes from the US, from Asia to the US, and how are we affected? So if we look at routes from China to the West Coast, it's a direct shot. From China to the South Central, Southeastern United States, everything goes through the Panama Canal. The same type of route from Vietnam, which is south of China, same thing, West Coast to Panama Canal. Also the same route from South Korea, usually the Busan Harbor, either directly to the West Coast or through the Panama Canal. And what we're finding is that the biggest direct effect is on the U.S. northern ports. We're seeing that because the Houthi militants are attacking the Suez Canal where the Red Sea is located, shipments have to be rerouted through South Africa. So if you look at the image on the left, it's going to show where the Red Sea is located. And the image on the right is because of the Houthi militants attacking the Red Sea, everything is rerouted through the Cape of Good Hope in South Africa. And what we're finding is this is having an increased effect on shipping delays and costs. So, for example, when you're rerouting from the Suez Canal, you have to go through the Cape of Good Hope in Africa. You're adding 2 weeks to your shipping schedule. You're also have a risk of having a shortage of shipping containers. The DHL of the CEO of DHL, Tobias Meyer, said that such a shortage could occur because containers may not be transported to Asia in sufficient quantities. So there could be delays. You could make the material, and then you'll have to wait for containers to come back to Asia to then fulfill that container and then send it on its way. Another issue, as mentioned earlier, is that with increased insurance premium, that can directly increase freight rates. CEO of Maersk, Vincent Clerc, said that there could be potential inflationary pressures, which we're going over what some of those other pressures are in the following slides. One is because of the longer route, oil prices are going higher. Last week, oil prices were up 3%. And so what the result is, we can have an increase in rising prices of manufactured goods. So, for example, 30% of global container shipments are coming from, they go through the Suez Canal or the Red Sea, and that is what is being disrupted. So what I wanted to do is kind of look at a macro level, how are the prices and deliveries being affected? And what I saw first is if you compare the shipping issues now versus back in the end of 2021, beginning of 2022 at COVID, the Shanghai Containerized Freight Index shows that shipments were way worse back then than they are now. So back in 2021, beginning of 2022, shipping freight rates ranged from, my recollection is $17,000 all the way up to $23,000 per container. And in addition to that, there was roughly $1,000 to $1,500 just to get your goods on a boat. So it was highly more expensive then than it is now. The other thing that we're seeing, which is good for us, that's different, is that demand is slower, A, because of the economy, and B, because of this attack on the Red Sea. So we're hoping that shipping rates may come down. Another note is the Chinese New Year is from February 10th to February 24th, and the highest amount of shipping throughout the year occurs in the months of January and February. So I went back and I looked at how is that affecting my company, and I had actually quoted 14 containers back in December 15th, which is 5 weeks ago, and at that point prices were roughly $4,400 per container. If you fast forward 5 weeks later today, it looks like the prices have somewhat stabilized, and they're right at $7,000 to $7,200 per container at a price back on Friday, and the one again today, January 23rd, where the prices were roughly $7,037 per container. So then I broke that down and I looked at, okay, if you look at 2mm glue down and they're 57,600 square feet that's loaded onto a container, the prices went up 4.5 cents per square foot, from 7.5 cents to 12 cents, all the way down to if we're loading 23,000 square feet for 5mm click, rates went from 19 cents all the way up to 31 cents per container. So we're hoping that these rates will come down, but I wanted to share with you the current increases in freight costs. I haven't seen too much in terms of delivery, but that's something that we'll definitely need to watch. If you want more research, you can look at these links below. I've also downloaded the PDF in the description below, and we would love it for you to like and subscribe for future video podcasts. Thank you.